PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin-settled account. Visit the link below and start trading on PrimeXPT in minutes.
YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirdpress.com/YFDAI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirdpress.com/bistro. CryptoCard bridges the gap between DeFi and e-commerce by allowing you to directly spend your crypto on countless real-world goods. Learn more at thebirdpress.com/CryptoCard. Equinix is a NASDAQ-listed digital assets company offering crypto exchange, custody, asset management, borrowing and lending services, and more. Enhance your crypto wealth today at thebirdpress.com/Equinix.
Okay, everybody. It's Adrian, CryptoBirb speaking, and this is Friday. This is Friday, 30th of July. It's actually, it's 7 p.m. right now, and my wife probably would not always be happy about me just staying late up in the office, but I have a good purpose for that, because I'm happy to be hosting another weekly premium webinar for everybody, streamed directly to our YouTube account and the Birbnest YouTube, to my Twitter, to the Birbnest Twitter, and there's so much of extremely valuable content that you guys are going to get and take away from this very episode, and this is going to be like this for a couple of reasons. So to start with, we are going to touch something that would hurt Bird's asses too much, which is talks about the all-time highs of Bitcoin, talks about what we can expect from Bitcoin to do or achieve for the milestones, ideas, whether it's pretty much like just going to new all-time highs later this year, or it's just my pure imagination and I'm wrong. We're going to talk about it with a very special guest today. My well, I can say my friend, although Will has not been probably for years, like at least publicly, because he's just become an extremely big like crypto star in this industry for his amazing skills in on-chain analysis. Well, what can I say, ladies and gentlemen? Please welcome to today's stream as well, Will Clement. How's it going, Will?
Hey, Birb. Thanks so much for the kind introduction, man. I watch your weekly episodes a fair amount, so I'm happy to be on, man. Thank you.
Cool. Very good. Very good. And the very quick structure for everybody who's new to our weekly streams, our weekly episodes of or the webinars, if you will. I'm going to bring a very quick round up and warm up for Bitcoin's technical overview for the low, medium, and longer time frames. Then I'm going to actually show you for the fuller picture what's happening with altcoins overall, what you can expect also from the legacy markets, to kind of get you the complete picture, 360-degree analysis scope, so that you can fit all the concepts that we're going to cover today with Will, somehow better for a better understanding. Okay, and then the meat of today's meeting is the how you can predict the all-time highs, like what technical tools you can use actually to have some sort of guesses, right? Because the truth is, nobody knows where the future is going to be, what it's going to show you, right? Nobody knows where Bitcoin is going to be in 5 years from now, in a year, or in a day, right? Or in 5 minutes. It's just some sort of guess that we can make based off some logical, more or less, predictions. And I'm going to give you a couple of technical tools that will help you have these predictions. And then we move on to the very, very special, today's very special on-chain views, on-chain analysis, best on-chain metrics you can guys use to actually spot the very peaks of the bull markets, the very throws, the very bottoms. And this is going to be the Will's part. Okay, we're going to make sure to keep you guys happy, to deliver some sort of a value. And for those who are not just pretty much just familiar with what we do, please make sure you leave the you leave the thumbs up, you leave some kind comments for Will if you're going to appreciate what he would share with you, because that is going to be a big episode. Okay, so I think we are good to go with very quick view for the sharing the screen. Okay, to start with, where are we, ladies and gentlemen? Okay, we are obviously still in one and the same range. Okay, nothing's changed. I can actually just change the colors perhaps for everybody's better views. Okay, we are still in here in the very same range that's been lasting for more than 70 days already. That pretty much like just bottomed, in here per se on May 18th with the selling climax. Then we had another fake out, somewhere mid-June. Okay, and all of it kind of like just gives you this idea that we're still not directional, that we're still going, in the messy range, messy trading bound range, if you will. Okay, somewhere between the $30,000 and $43,000. Okay, that is apparently where we are. And what you can see locally, which is pretty much like here, what's going on is that we approached the range highs area. The range highs where it showed weakness before. Okay, so we can tell that pretty much like any any intraday price action that was in here, or here or here, was sold into the range highs. This creates some sort of like a block, of resistances. It tells you that when you had the candle with an upside wick, just like over a certain level, that it tells you that on the lower time frame it actually had the proper breakout, and which ended up being a fake out, okay, at the same level. So these upper shadows on the reversal candles are actually what's showing a local fake out on top, right into the supply area of the range highs. Okay, this is from the price action point of view. But if we have a look at a Burbicator Pros, IDS, we can tell that we're going upwards on average locally. Okay, this is a hybrid average. This is a mean baseline, if you will. But most importantly, we are we are testing the resistance. And this resistance is based on volume. These are the volume-weighted average price trend lines, okay? And they literally tell you that right now, we are somewhere between, the bottom trend line is 39.6. The upper one is 42.56. So this is creating some sort of like, again, volume-based resistance cluster. So see how perfectly it does match, the overall price action indications, okay, the range highs. So you can take the conclusion that whatever happens outside, it's going to be bullish, because it's going to reverse the trend, the medium time frame trend of this range, and give you a proper breakout only after we tackle and break through this cluster of resistances, okay? I hope it does make sense and everybody's catching up somehow, okay? Please let me know if there's, some confusion. Keep me posted in the chats. Okay, so this is the medium time frame point. We are at the very range highs, right? Perhaps about to break out. If this is some sort of like not going to meet any unprecedented, unexpected news, like FUD news from Fed, or or Elon Musk's tweets about some bearish stuff for Bitcoin, or making another joke, right? So unless we see that, there is a very high chance that we, after having 9 green days or orange days here in this context in a row, which happened recently, right before the major rally kicked off, okay, there is a high chance that this pattern may actually help us just break through and continue higher. And if that happens, then 50s unlock. Okay, then 50s unlock. You can tell there is some volatility extension based level somewhere to play at the resistance somewhere around $53,000, which potentially may be the case in case we actually just break through. Because have a look, this range is a technically sized base equal to like $13,000. Okay, measured from the bottom, this one or this one, to the peak, okay, of the range. So it tells you that technically what happens in here, it should give you the measured movement towards the, in the opposite direction, in case this is an upside breakout, which is going to give you the number, right, derived from like the range highs with 13,000 the base size added on top of that. Okay, so this is placing you somewhere technically between $56,000. Okay, which would make a lot of sense if that happens. So But then, of course, after the breakout, you must not just break down, right? You must not fake it out. Otherwise, it's going to get ugly, most likely. Okay. So knowing where we are locally, knowing that also, from the longer point of view, there is pretty much like, just local sideways that's been going for the secondary sideways. Okay. We are going up still on average. Of course, this is the 200-day and 200-week moving average. Okay, so it pretty much like tells you that whatever happens, the bull runs or bear runs, it still goes up. Okay, and the Bitcoin is going to truly go to zero, perhaps if this is all the bearish dreams come true. Only if this 200-week MA starts reversing, right? That's where I would be worried for the long term. But until that happens, I'm good. So again, we had the first wave, the second wave of Elliott, if you will, the third wave, which is usually the longest one, the fourth one, which seems to be ending right now. And it seems to be confirmed for many reasons, like perfectly oversold trend and momentum, perfect reset unseen ever since 2018 lows, or September 2019, anywhere where Bitcoin was trending somewhere between $3,000 and $6,000. Okay, so Bitcoin is, long story short, as oversold and as reset for the market as it was technically trading in the inside $3,000 to $6,000 area. Okay, it does make a lot of sense to expect new all-time highs, especially that we have not seen the fifth wave of Elliott. Okay, this is the long-term narrative that I actually just take. But what about the lower time frames? Okay, because we know the medium time frame perspective, we know the lower time frames. Let's just have the high time frames. Let's just have a tiny brief moment to have a look inside what's cooking for the local time frames. Okay, for the hourly chart, we can actually just take off and hide this. Okay, so what you are seeing is that there is some sort of like a fake out, here on top. Okay, fake outs are never good after rallies, because the fake outs, are usually bearish reversals. We had some sort of like a local pennant, but it's at the same time been part of a bigger range. Okay, so like I would not trust this pennant too much. It actually broke down. But long story short, we are consolidating, and after massive impulse up, we're consolidating somewhere between 36, 37, and $40,000. Okay, that's local consolidation, and as long as we stay inside this trading bounce, okay, there is no trend per se. So this is a range inside of a medium time frame range. Okay, so double range, double lack of clarity for everybody. And what does it mean for altcoins? Here you can tell that locally, altcoins have also been seeing some sort of like a good recovery. There was a massive multi-month bullish momentum divergence. Okay, this is RSI, very typical classical momentum oscillator. Okay, and it tells you that pretty much like the market started rebounding, if you will. Okay, the correction has seemingly stopped already, and we are just somewhere again into the range highs of the altcoins range as well, potentially to follow whatever Bitcoin does. So if Bitcoin does break up in the upwards, right, then altcoins would probably follow that based on the superposition effect that I explained the other week. Okay, but if this bullish divergence is something that makes me bullish for altcoins for the next couple of weeks or months. Okay, especially if that is backed by bullish Bitcoin. So long story short, it does seem that the market seems to be getting some sort of like a relief bounces anytime soon, whether it's just a temporary, like to last week or two or a month, or it's going to be the final bottom. That's where we're going up only from here. That's another story, right? But what it tells me, that these, this mean reversion of 200-day moving average that you saw in here, okay, the market has recently, the market peaked for alts, somewhere like earlier. No, it was actually just later, as far as I can recall, to Bitcoin, but it still had its May peaks, and ever since, it was kind of like just in this corrective movement, okay, and it perfectly neutralized the sell-off, right, because it reverted to the mean, to its 200-day moving average. So technically, it's kind of like reset, just like Bitcoin has its own reset. Altcoins are also reset, which means that if you have some fancy, good, valuable projects like 90 to 90% declines, drawdowns from the peak, that might be a good idea to actually scoop some of them. Okay, so yeah, Will, what a comment on that?
Yeah, sure. I guess just to tag on, I would say, we spent a lot of time in the lower half of that range. The way I kind of broke it down for, I don't do a whole lot of TA, but I was just looking at, 30K, about 35, 36 and a half, and then 40K, of course, at the top of the range. Of course, we're still in the range at the top. But I don't think it's unreasonable at all to say that perhaps, we consolidate for a few days or a week or whatever, and, in between the middle and upper part of that range, just given the amount of time we spent. Like, if you were just to draw a trend line right down the middle of that range, you can see, in the left side of that, we were trading in the upper half, right side, we were trading in the lower half. So, I don't think it's unreasonable at all to say we're going to cool off after this massive impulse, like you said, that we've had up. I don't think it's unreasonable at all. Before we break out, I wanted to ask you though, like, obviously, like, I'm bullish, but I want to know from you, from a TA perspective, what is that level for you that kind of gives you confirmation that perhaps, okay, yeah, this thing's going to run higher, or is it all-time highs? Because, of course, anything below new all-time highs is still technically a lower high, and that still, we're still technically not out of the woods till we have those all-time highs. So, like, is there a level for you that you think, aside from all-time highs, that, okay, yeah, this thing's going to run?
There is, of course, a level like this. Let me just actually display that. This is not the one. This is supposed to be this one, right? This is 200-day moving average. First of all, there are so many reasons, that make me bullish pretty much, right? But like these long-term patterns, I always kind of like just smile at times whenever people tell me, okay, like, dude, this is the end, like, this is head and shoulders pattern, like, it's targeting minus $5,000, it's going to zero or even negative, right? Because this is the pattern I read in the book, that this pattern is supposed to break down. So what happens on the long time frame patterns is that, well, obviously every single person on this planet has a time to read 5,000 books and be able to spot this head and shoulders pattern. So what happens if everybody is just spotting that, and they just pretty much like just join the market, and they are complacent that they are just such good traders, and they are so perfect at spotting the patterns, that make them usually short prematurely, right? No, before even the right shoulder like forms per se, because the right shoulder formation would only happen to be verified and confirmed if we saw a proper breakdown and a retest which is supposed to be rejected, right? That would be like some warning sign that, okay, we may top these like low 20s or something like this. But we didn't see that, and most of the people actually shorted prematurely, this right shoulder, which is not even a perfect right shoulder because it's already twice as long as the left shoulder. So it's kind of like a Quasimodo with like extended arm or something. So most likely in what most cases happens, for these head and shoulders patterns, especially in the higher time frames, is that it tricks people, right? People short it, and it actually just delivers when it's undervalued after massive decline. It gives enough fuel for the bulls, and those who short it to get a proper liquidity to actually just enter big positions and an undervalued position. And what happens is, it usually just fakes it, right? And as the statistics show, the failed patterns tend to perform even better. So here we also have this 200-day moving average, which I started talking about, Will. And this corresponds with 200-day, like for everybody who's not familiar just yet, 200-day average of Bitcoin, okay, of Bitcoin's price. This tells you that based on 200 past days, Bitcoin should be trading at around $45,000. That is its fair price according to arithmetics, or according to statistics of 200 past days. Okay, and it's trading below, so it tells you that it's locally, at least temporarily, like undervalued, right, or underpriced. So if it sees a massive breakthrough, a massive breakout over this 200-day moving average, okay, and the retest, here's the breakout, and if the retest holds, we don't see any like significant breakdown back below this average, right? Then this is like holding the support is going to give me the idea that this is going to be reclaim of this 200-day moving average at potential upside continuation, which would make, match the overall concept of this head and shoulders not being really head and shoulders, or being a failed head and shoulders. All right, so this 45K, is, in my opinion, is a good level to watch in this case.
Sure, and I want to ask you, this is a little bit unrelated. Do you see any correlation between the option expiries? Because, I'm not necessarily an expert on derivatives. I watch things like the funding rate and for the perpetual market, but in terms of options, I really am not very knowledgeable. So do you think there's any correlation between those monthly option expiries and price? Because it was interesting that it almost looked like, price was getting, if you watched, price action around the daily close, it really looks like someone's trying to pin the price. Especially last night, it was pretty evident. And then, as soon as we had the expiry on Deribit, which Deribit has way more open interest than CME, and that expired at 4 a.m. and right after 4 a.m. was, we just had this big hourly candle down. So do you see that as kind of like a, from, every month, do you see any kind of correlation there, or do you think that's just kind of like a coincidence?
Yeah, there is a correlation. There is some sort of like a pattern in that as well, because what we can actually just see. This is specifications, specs. Okay, so here, just for an example of CME, because I consider that mainly to be sort of like one of the main futures, or options indicator that I would use for the institutional money, let's say. But this tells you this is a contract unit, for futures to be equal to 5 Bitcoins, right? So there is some sort of like we cannot get less than one contract, right? So it tells you about this potential size of money that is just only allowed to trade in there, right? And whenever there is a monthly expiry, for futures or for options, you see this sort of like a volatility, right, kicking in, because the options expiry, futures expiry tells you that there is a spike. Actually, well, not a spike, but how to call that? Like the open interest pretty much like decreases, right? Because the amount of contracts in the market which are open pretty much like just decreases sharply because there is an expiry, right? Options expire worthless, of course, if they are like, not like worthless for you if you're not in the money, right? If you're wrong on the option, but at the same time, like unless this expires, you can realize that option, right? So you have the option to realize the paper, if you will. But if you don't, then it just expires worthless. But for futures, there is this expiry as well that combined with options, it not only decreases the open interest, right? So sharp decline in the open contracts in the market, but also at the same time, it boosts the volume, right? So you have the open interest decreasing and volume increasing because of that, because the number of realized contracts pretty much like just go up, right? The realized transactions. So this means nothing else but just volatility, and volatility in the financial markets means always risk, right? So risk of increased volatility, increased risk, enhanced risk of being wrong. Let's say whenever betting the futures for longs or shorts, there is a higher chances for you that they're going to be wrong about that at one point, especially for high time frame, for high leverage traders, right? So the only way I would read it, as a matter of fact, is more volatility wise, more risk wise, rather than direction itself, especially that we are in this range, which is directionless, right? So I would take it just like this, both sided upwards and downwards volatility, like just increase. That's the way I read it.
Got it. Awesome. And one last question. What do you make of the difference between, I don't know if you pay attention to like the futures open interest, but you've seen this huge increase in stablecoin margin futures versus the regular coin margin. What does that indicate to you?
Do you have a chart?
Yeah, I can pull it up. Yeah.
You can display it. Yeah.
Okay. Let me do share screen. All right. Cool. Can you see it?
Yeah, it's there. Yes.
It might just take 1 second because my computer's been a little slow today. But yeah, I think it's been interesting just to see this huge spike in stablecoin margin futures. Like the way I've been thinking about it, and I'll pull the chart up here. So here we go. So this is the percentage of crypto margin futures that percentage of the open interest that is margined by coins and not stable coins. And so like you see, since we've been in this consolidation, this is May 19th right here. It's just been this big drawdown in coin margin. And then if I pull up the stable coin margin, here we go. You see, conversely, here's the capitulation event when we entered the range. You see a big increase in the stable coin. So to me, like the way I was just trying to think of it is like if you collateralize that futures contract with Bitcoin, right? Your incentive, you are how do I word this? You benefit more when the price appreciates because the collateral is appreciating as well. And so like there's this convexity to it where as the Bitcoin price rises, you're in the money more on your futures contract, but also the collateral that you have posted to that futures contract is going up as well. And so like it becomes this self-fulfilling thing. And then of course that leads to a bigger collapse on the way down if people are continually levering up more and more because their collateral is going up in value because Bitcoin's price is going up. But it's been interesting to see people now using stable coins since we've been in this range. And like the way I personally perceive that is two ways. Like looking at that along with funding to me is showing that the market is leaning bearish, because why would you use Bitcoin as collateral if you thought the price was going to go down? Because then your collateral would be going down as well, and you would have to, be like you're digging, you're digging yourself a hole, and that just doesn't make any logical sense. You would use stable coins because as Bitcoin's price goes down, your collateral would go up. It would be a larger value compared to the futures contract. So do you see that as the reason behind it? Do you think it's just people moving to like a more risk off stance in terms of how they decide to margin those futures? Because it looked like a very similar thing after March of last year. You had like kind of this. I guess the market was had just experienced this big capitulation event and was kind of hesitant to hop back towards coin margin futures.
That's actually a good point. I was not really into like spotting the collaterals, like divergences in the direction for the crypto collateralized and the the cash margin and this is a tether, or does it refer to the entire pool of the stable coins?
Yeah, and the entire pool of the stable coins. It can also be cash margined as well. It's just saying on crypto, on crypto coin margin. Do you look at the funding rate as well? I know like that's a pretty or the premium.
Yeah, you can display it actually if you have it. Yeah. But like the funding rate, usually is of course just mainly for the futures traders, if you will. I mean, I'm not really a future trader. I do. If ever I use the funding rate, then this pretty much like is there to tell you which side of the market is overcrowded, right? So it just enhances the risks of reversal whenever there's some extreme funding going on, and that's the way. Like that's a simplicity in that, in my opinion.
Yeah. So I just pulled the chart up. I guess for listeners, like I don't know, the rule of thumb you could think of this is. It's literally just if funding is negative, that means that the futures are trading at a premium to the index, which is like the weighted average of the exchange price. And then, if rates are positive, then, it's showing that futures are trading higher than spot. And so like, as Birb said, when you have prolonged negative funding rates, that's traditionally, that's a bearish sign. And when you have prolonged positive funding rates, that's a bearish thing. But where I really think that funding comes in is like if you see a move and funding is doing the opposite. So like if price is going up really rapidly, and this is what happened, and I know you were talking about a short squeeze. I posted something on my Twitter as well. Like when we got in here, you saw price starting to run up, but then if you look at the funding rate just kept going more negative. And so, that was basically showing like everybody I guess, maybe they had PTSD from down only for 3 months, but everyone was basically trying to fade the pump. And then like if you even looked at looking at the different exchanges, you see like Deribit and FTX, which is, Birb, I know you know this. This is where like, this is some of the big brain people go on compared to like Bybit or something like that. So I think that was kind of an indication too, to see like FTX and Deribit trading at, positive funding rates, while you had like Bybit was the most deeply negative of them all, but also like Bybit and Binance were both trading negative too. So I think like it's something useful. What did you say? I'm sorry.
No, I'm saying that's interesting, especially for everybody who's not or who's new to the futures. It's very good to understand always the funding rates and how it works. For the contango backwardation, like pretty much like just what you're sharing. Will keep on.
Yeah, so like this is, I don't know, this is just something that I kind of look at on like a shorter time frame, I guess, to kind of get somewhat of a directionality sense of where we're headed.
Yeah. This does make a lot of sense. Like for the local timeframes trading, but at the same time, I usually avoid local timeframes mainly because there is so much fuckery always. There is so much stop hunting going on, especially since the market has been so much institutionalized. This is so easy to actually just get tricked. And everybody who's new in the market who just joined, they don't know that yet, right? And we've been here for some time already, so I guess to be wise enough not to trade 100x and fade every pump you see in the range. So I think we agree on we're on the same page. But I quickly want to again bring because for everybody there's going to be a very quick 5-10 minute max Q&A session at the very end of this webinar. So make sure you stay tuned for that and prepare some sort of like questions. Put them in the channels, put them in the chats, leave some thumbs up if you will as well, because we're going to have a couple of questions to be picked. I'm going to pick one or two or three, and Will is going to do the same for you. So make sure you put some questions if you want to get answered. But since we're talking about local timeframes of Bitcoin, which has already been covered, or medium timeframes of Bitcoin, which have already been covered, I know many of you came here to talk or actually to listen to the discussion about the all-time highs, right? So what about these all-time highs? And I hope everybody can see the screen very, very good. Okay, just making sure. But there are so many different technical ways that it can actually just anticipate some sort of like more or less specified technical levels. Okay, so to start with, like we can actually just I guess 1 second. Is it the same chart? Yes, this is the same chart. So we can actually just get rid of that for this moment. Okay, but to start with, very simple Fibonacci-based ratio extension, right? So what are you having in here? Okay, let's just, you have to know, the typical Elliott waves principles. Let's say the simplest one of them all is that the trends versus the corrective waves consist of 5 subsequent waves. Okay, so every bull market is going to consist of 5 waves. Every bear market is supposed to continue or constitute 5 waves as well. Okay, in the downside direction. So what you can do based on the wave count, that there's this where the bear market ended and the bull market started. This was the 3120 bottom on December 18 that initiated 4-month-long accumulation sideways with the full depression. I can remember that perfectly as well. And the 14K first rally, and which, apparently was the first wave. Then you had the corrective wave to the first wave, which, as a matter of fact, due to COVID, invaded territory of the first wave. So it's not really the perfect case, but hey, nothing in this plan, nothing in this world is perfect. So nothing in this world is ideal. No technical analysis like overview is ideal either, right? So don't expect every single tool to pinpoint you perfect reversal on top or bottom. But long story short, the second corrective wave overextended to the bottom. The third one, okay, which with the top that doesn't look like a typical top for Bitcoin. That Bitcoin, usually does not take 3-4 months to actually just form around the top, right? Rather due to its market mechanisms and the fact how much of how much institutionalized the market has become. Usually comes with blow off tops, right? And then capitulation spikes. So you have the overextension onto the top in the peak of euphoria, right? With some typical like Burj Khalifa drop, right? Or the capitulation spike, just like you saw in here. So this tells you that this is 1, 2, 3, 4th wave, and there is a high chance that, well, if we break this 200-day moving average, then in my opinion, it's going to be confirmed nicely that the 5th wave is ongoing, that this local reversal has already started on the MIG time frame, okay? And the way you can actually just anticipate the level is by applying very simple trend, based Fibonacci extension, okay? So you know that the 5th wave is the one following the 4th wave, right? So 5th wave, also knowing that is the final wave, final climax of the bull market in here, it's supposed to be following the 4th wave, okay? And the 4th wave is, as a matter of fact, result of the 3rd wave. Okay, so what you can do is you can apply the Fibonacci trend-based extension, knowing that that you want to see where technically, the 5th wave can top out, knowing that this is an extension of the 3rd wave as well. Okay, so the 3rd wave starts in here. Like you probably do not see that, but you actually just have the bottom in here as the first anchor, the top in here as the second anchor, and the correction. Okay, and this is such a sequence that you actually just account in here, and you get the extensions. You get the extensions, the 1.0 extension, the 1.68 extension, which is the golden one, let's say, 0.618 extension added on top of the first extension. So long story short, trend-based Fibonacci extensions give you the targets in here. And knowing that the 5th wave is the extension, okay, is the upside extension of the 3rd wave, well, with the 4th in between, right? So this, Bitcoin in general, like that, the golden ratio 0.618 of Fibonacci sequence is something that actually just naturally happens in nature, right? So there is a high chance that Bitcoin is going to have at least some of these, to have perhaps some sort of like a narrative around which people are going to, make their decisions as well, right? Because remember that TA is a self-fulfilling prophecy. So if many people use trend-based extensions in the price discovery, just territory, then there is a high chance that it's going to work, right? So my personal bet is this, right? Somewhere between 80 and 120, this would make quite a good sense, like going 2-3x from here, 3-4x perhaps from here. It's going to be a lot. It's going to be a lot, and in my opinion, that makes sense. On top of that, very simple stuff. You can use some sort of like trend line as well, right? So perhaps not. Well, this is logarithmic chart, right? So you're not going to have the perfect, I should say, well, sense for that, but you could use some trend lines, right? Here you have one trend line with a couple of points, just here, base points in here. Okay, so that this is some sort of like a trend line that whatever happens, well, at least it's ascending, right? This 3rd wave extension is actually showing you some deviation against this trend line, but you also have this trend line, right? And you also had this trend line. So these trend lines create some sort of like a fan principle. But knowing and assuming that this is the bottom, right, and that this was the major bottom, then if you probably extend this chart somehow, you could get the idea, first of all, to anticipate the monster trend line, let's say, the middle trend line, right, and the shortest one, which actually got broken. So we just bounced off the middle one, and assuming this is the bottom, it's supposed to continue, right, in some sort of like a fan. So you have something like this, the local trend line, the major one, the accelerated trend line, and the most vertical one, the most steepy, okay, the steepest. And whenever this one breaks, there is a high chance it actually just finds its support in here. And it does, and if it does, then there is a high chance as well, then it pulls back towards the broken trend line, right? So whenever there is this upside extension of this trend line, it's actually hard to match it, show it in this chart because of the screen size. But there is a chance that it would take you somewhere as well. If you extrapolate it, that it would take you somewhere like towards these 100Ks, right? Like this or this, like, just does not matter too much, but it makes quite a lot of sense, right? To know that as long as this has sense, you can expect this to serve you as a trend line, as an all-time high, kind of like just relation. Patterns. Before we actually just jump over to Will's part about monster on-chain reversal signals from the on-chain, I just want to let you know again that we have the patterns, right? And these patterns, just let me find it. Whatever happens inside here, if it's going to follow this case, like a symmetrical triangle, or not, it doesn't matter too much, because what matters is the range. What matters is the base size, and the base size is from 28s towards like 65s, right? So it gets you somewhere between like $35,000 range. Okay, so base size, again, added on top of the previous all-time highs with the measured move of the pattern, right? If you see a pattern breakout, then it's a very high chances that this $35,000 added on top of $65,000 is going to give you proper technical measure target. Okay, so which places you again somewhere around $100,000, right? So this is the third kind of like a way to anticipate. After the Fibonacci extensions, after the trend lines, the patterns are the third way on how you can anticipate the all-time highs. You can also use the moving averages. Okay, if you can tell that this is some sort of like moving average, this is a 50-week moving average, then you can try to find some sort of like trends in that. Like, moving average is a trend itself, right? But you can tell when it actually just changes. But as long as it does not change, you can anticipate, again, just it to sustain the direction at least for some time. And you can use this to anticipate, again, to anticipate some levels in the future, right? So if you do this, then it gets you with the time somewhere like in the 60s territory, in the 60s, 70s perhaps, right? You can use it one way or another to extrapolate into the future based on the previous mean results. Okay, and well, there are so many more, right? But I also want to let Will Clemente as well comment and then just speak on the on-chain pro. But round numbers, everybody. The final one, round numbers. We as people subconsciously are attached to round numbers. We fear round numbers. Like, if you go into the shop and want to purchase a bag of snacks or something, then you're going to more willingly pay $9.95 or $9.99 rather than 10, right? 0.00. So it's kind of like these round numbers that make people fear. So $100,000, if you think about it, it is a very magnet kind of like level. It's like transforming Bitcoin from 5 to 6 figure numbers, right? And $100,000, I can remember perfectly where Bitcoin was breaking $10,000 for the first time. It was a massive thing, every $3,000, like 4,000, every 1,000 upwards, when it was going up in 2017, was just a major significant resistance point. Okay, so every round number is going to also make you think that this is a resistance. So whenever we approach, and if we approach these 100K levels, okay, then I can guarantee to you that this is going to work as an extremely strong resistance. Okay, and that's it from me, perhaps very locally. Like, Will, if we go to present to everybody who's listening, before we shoot a quick 5-minute Q&A afterwards, what are the most significant monster like on-chain indicators that you use to spot some major reversals? Talking about the big ones, and what your all-time highs targets may be based on that.
Yeah, sure. Let me share screen real quick.
Go ahead.
Yeah, so I'm going to pull up a couple things in the newsletter that I put out a weekly newsletter, just on-chain updates. I don't personally have any price target. I think, from my perspective with a lot of the on-chain data, I don't think it's perhaps useful to try to like extrapolate some kind of price target. Like, what you could do is say, hey, look, here's all these metrics. Here's the peak of what they got in previous cycles. Let's extrapolate some kind of price target and multiply where the ratio is now compared to where it was in previous bull market peaks. And I just don't find that very viable because we've only had 2 sample sizes. So I think like each cycle is different, but there are some similarities. But in terms of like what I look at in a broader sense, one of the main things I wanted to pull up was this metric, and what it basically does is it looks at like kind of the broader accumulation behavior in the market. And so what I did is I took this metric from Glassnode. What they have is and the reason I use Glassnode over other on-chain data providers is they have this proprietary entity data. And so entities are basically addresses that are kind of like forensically clustered through like, by their data scientists at Glassnode into identifying like different, what look like users on the blockchain. And a user could be me or you with their own hardware wallet. It could be a corporate treasury. It could be an ETF, right? And so it's looking at the spending behavior of these entities. Are these entities taking in a lot of coins? And are they not sending many out? Are they, in and out of the market all day long? Are they, speculative traders? And so, what I kind of wanted to get out of this is like, how can I look at this in a much broader sense, right? We get these intraday movements and stuff. I want to know, what's driving the multi-month kind of trend here. And so what I did was I looked at a variant of the liquids, the 30-day net change. So like, what is the liquid supply now, right? And a liquid supply being entities that have very low spending behavior and the amount of supply held by them. What's their holdings now? What's their holdings 30 days ago? And then subtracting the two, and that's the net change. And then running and this is what I did in this metric, running a 365-day RSI over this. And I did that just so I could get this broader sense in kind of the movement of this without, having any kind of like, very small movements that perhaps, are altering the data. I really just wanted to harvest, the broader trend. And so like what you see is, when we head into a bull market here, this is from 2017, 2018. You see, we have this capitulation in the bear market. Heading into the bull market, you start to see supply get locked up, and you have this wave of supply shock, is the way I like to think about it. And here you can see in 2017, we went from a sell signal on the indicator, and this is where I think it's useful. I think the sell indications are, they're fairly accurate. Like, you see here at the top of September, but what I really get out of this is the buy signals more so. And especially if you see this, if you see a full capitulation, you see a full drawdown in a liquid supply, a bunch of coins becoming liquid, and then a very strong recovery in accumulation. So you're seeing a really strong momentum in coins getting locked up and moving to those entities that have very low spending history. And so this is what you saw in 2017 that kind of propelled us upwards. And then also you can see here, this is what propelled us out of the bottom of the bear, although we didn't get a full capitulation to buy signal swing, but you still did get that lockup of coins. But you see here, we didn't get that full swing. It took all the way, the swing took all the way from, early 2018 to early 2019 versus here, it was from April to kind of fall 2017. And so when you look now, this is what propelled us into the early bull market, this movement from September into, call it like mid-November. And this wave you can see in the RSI of supply shock. And then I think, the speculators come in and you have market neutral funds coming in, taking advantage of like the grayscale arbitrage and these cash and carry trades, and that capital coming in accelerates the bull market into what we had this distribution up here. But since then, you could see we moved back down into a sell. You had a lot of coins become liquid, and that's part of the reason why we had this big drawdown into the range we're currently in. But you see this really strong recovery, and going back, I haven't seen anything like this before. Obviously, we've generally in a similar time frame gone from sell to buy, and obviously the smaller the time frame between the two, like the stronger the recovery is. So very small time between the two. But just if you look at RSI, I mean, it's literally just straight up. There's no bumps or any kind of wiggles around. I mean, it's just literally just straight from sell to buy. So to like me, what this is really showing is that there's a really strong reaccumulation from strong hands. And like another way to look at this is this indicator. This isn't like another thing I made from using their entity data. It's looking at the actual like real-time change between liquid and illiquid entity. So like the previous one was looking at that, like I said, in a broader sense, but this is like literally the day-to-day change. And so what you see is this is actually, we peaked out in like mid April, but then this is actually right around when we had that capitulation May 19th. And then since then, when we were trading in the range, we were slowly, had this reaccumulation phase. You had this divergence against price, but it really wasn't super strong. But you did have, coins were getting reaccumulated. But then here, this is about, I don't know, a month ago, this kind of popped. This is right at the beginning of July. This popped. And then at this point, I became, very strongly bullish because you had really heavy accumulation. That's what this is showing to me. And then we've been chopping sideways, and we've just got another big uptick in the indicator. And this data is as of Wednesday, so we could have got. I haven't looked at it as updated as of yesterday, but as of Wednesday, we got another big uptick in this. So long story short, what this is really showing to me, all this is that supply is getting locked up, and once we get volume come back in, we are going to have some kind of supply shock effect on the market. And you had this really strong divergence between this accumulation behavior and price, and I think that's finally starting to get reflected. Going back, like we've had some similar divergences like January and September of last year, but like it seems the stronger the divergence between on-chain accumulation behavior and price, the bigger the effect it has once it finally starts getting priced in, right? And like I said, we have this massive divergence that's been brewing for the last 2-3 months. And then so like that's the accumulation behavior, and that's obviously bullish, but just keep in mind on-chain activity in general, things like active addresses, number of transfers, a lot of that stuff is slightly trending upwards over the last couple of weeks, but it's still not in anything that's screaming bull market territory. So like I think this accumulation behavior is going to lead this, but I would like to see that follow through, perhaps over the next couple of weeks, month or two, in that actual on-chain transfer activity, seeing active addresses start to come back, stuff like that. So yeah, that's what I would kind of be looking for.
Cool. Very good. So for everybody, if you could repeat the two indicators that everybody should take away, with regards to the on-chain. This is about the strong hands, right? The Bitcoin is moving to strong hands. Of Glassnode liquid, there was liquid supply, right? What was that?
Yeah, so it's not public, but it's using Glassnode's in liquid data. I just kind of mashed it together.
Cool. Very good. Okay, then there's going to be a very quick note for everybody on how you're going to be possibly able to get it. If Will's so kind to somehow spill the beans.
No. All you do is just divide. For anybody who has Glassnode, you just divide a liquid supply divided by highly liquid plus liquid, and you can get. And that's what this is. And anybody who's also on Glassnode and wants to create this one, you just do the 30-day. Just go in on the top part of Glassnode. There's a tab called Workbench, and you can just add technical indicators. Just add the stock RSI, change it to 365, and then yeah, you're good to go.
Okay. I think we have about 5 minutes left for the show to end. So let's if you don't mind, Will, let's pick one question each, perhaps one or two, depending if they're short or long.
Sure.
We can start with you. So just go ahead and scroll through the chat, unless you want me to find you one.
How to get Will's
There is a
newsletter? That's an easy question, but I won't take that one.
Okay, go ahead.
I mean, I can answer that, I guess. It's in my bio. If you go to W Clementi III, the newsletter's in my bio. It's completely free. I want to see if there's more of like an actual like on-chain related question though.
Is it the same link that you have in the bio on Twitter?
Yeah, exactly.
Or yes. Okay, cool. So it shows. It's supposed to show. Okay. There was a one which I just saw from You're the Bull. Do you think Binance, Kraken, and other exchanges reducing or removing margin will affect volatility? Could this change the scale of dramatic movements as we approach peak? Reduce or increase volatility? What is your take, Will?
Yeah. I think it's a good look for the space, but like if you go and listen to like Sam and CZ, most people really don't use above 20x leverage, at least people with like large amounts of capital. So like, I guess it affects the volatility in like a very short time frame perspective, right? But overall, I don't think it's really going to change much, just because like, people with large amounts of capital aren't trading over like 20x. So, seeing like the margin reduced, I think if anything, it's just kind of like a good look for the space and just for like people from the outside. Perhaps they perceive as the risk is going down, but to be honest, I really don't think it changes too much.
Mm-hmm. Okay, in between, I'm actually just going to come up with a question because I'm sure many people would follow up with that anytime soon. But if you think, like, assuming the new all-time high would come, what targets would you place in there?
Yeah, it's hard to kind of extrapolate that from on-chain. I think like this is kind of a cop-out answer, but I think for on-chain, you really have to just follow it week to week. And it's hard to really extrapolate to like several months out from now. Like I do think in a broader sense, we're going up in the coming weeks, right? But where we end up, I don't really think there's a good way to predict that with on-chain. I mean, you could kind of like look at different metrics and like where they've reached kind of like these overheated zones, right? And then kind of try to compare that. But still, I guess you could use that to kind of ballpark, and then like using those, a lot of those point to like, 200, 250K. But I personally that's not my price target. I'm just saying like if you were to do it that way, that's what you would kind of be looking at. But I'm just taking it kind of week to week, to be honest.
Yeah. Okay,
what about you?
So, yeah. This is actually, of course, this is the first way you can get it, right? You need to just keep a track of it, and there are so many indicators, that I use, like sentiment. I perfectly know that what crowds are always right in the middle of a trend, just like it's kind of like repeat always, but they are always right. They're always wrong about like anticipating the extremes, right? We because of our perception biases and our psychology, we tend to overextend the bottoms to the downwards direction, and it's opposite in the upwards direction. So there is always some like saliency that you don't expect the trend to change forever. Like you see Bitcoin making 20x, it means that it's going to continue this way forever, right? Which it never does. So long story short, there's like, I agree that overall, we are just kind of like teasing you right now, obviously, with giving some certain like targets or levels. Like my bet is 100K, somewhere between 90 and 120K personally. Well, but I'm pretty much sure that if that happens, I would have already cashed out. I would have already cashed out the majority of the profit. So I would just let the higher it goes. If we see it as upside breakout, just like I repeated the last time, if we see upside breakout of the pattern of this triangle. Of this massive capital amount range, with a potential final spike, in quarter four, then each and every single massive push, I'm going to be cashing out, because I don't care where the top is. Nobody knows where it's going to pinpoint it. But all that I know that when it does crash, it's going to be a big history, probably worse than anything we've seen so far. So before we wrap the show, let's actually have a very, very final question for you, Will. If you don't mind, there you go. From Mark, what causes the futures funding race to change? This is quite a simple one. Do traders determine it, or do exchange just determine it? How do you comment on that?
Yeah, that's a really good question. So the funding rate is just it's not manually done. It's just I guess they have developers that are pegging, the exchange funding rate to something called the index. And so the index is a weighted average of all exchanges, right? So like the price on Coinbase is going to have more weight to it than Bittrex, right? And so like it does this weighted average, and then the funding rate is literally, you can think of it as the difference between the spot price, right? And well, this is the premium, is the difference between the spot price and the futures price. And so like if traders are bidding futures really strongly, and that's what you saw at the beginning of this year, you're going to have really high funding rates. And we did have really high funding rates for a prolonged period of time because the futures were getting bid up higher than the spot price. And then like conversely, if you have negative funding rates, it means twofold. Like either A, futures are in aggregate, they're bearish, or it can also mean that spot buying is more aggressive than the buying in the futures market. So it can mean either of those things. But futures, the funding rate is basically, you could kind of use it as a sentiment indicator. But like I said, like earlier, where I think it's really important is like if you see price going one way and funding going strongly another, that's where I think you can kind of like catch some, like for example, like when we started going down on March 19th, I don't know if you remember this, but if you're looking at the funding, we were going down and then funding kept spiking. So it looked like all these speculative traders kept trying to like leverage long the bottom. And when I saw that, I remember going to bed and I was like, this thing's going to go further in the morning, just because they, that's what you have to have is in, any major Bitcoin correction is you have this really strong drawdown in the funding, and then you see like futures go into backwardation, and so like that is more of a bottom signal. It's very, very rare that you see that these speculative traders kind of trying to leverage long the bottom actually are right. You generally just need this full cleanse of that, and then conversely, once again, like, and this is what we saw earlier this week, to the upside is that you had really funding going deeply negative as price kept running up. And so, yeah, that's where I really think like in the shorter term, where it can be useful, but then also just like spotting a broader trend in the fundings. Like if funding's deeply negative for a long time, if futures going into backwardation, like going back in Bitcoin's history, that's been a solid time to start, accumulating a position. And then conversely, when funding has been positive for a prolonged period of time, it's a good time to kind of take some risk off.
Yeah, very good tips. Everybody, there's been so much free alpha shared from Will today on the on-chains parts, on his customized versions of Glassnode based on-chain analytics and whatnot beyond. I just want to give a final shout out. Everybody, make sure you follow Will Clemente on Twitter. Okay, he goes at W Clemente and triple L. Is that right?
Triple I. But yeah, thank you.
Triple I. That's not L. Okay. You need to be cautious with that. Very good. So this is Will Clemente the third, almost, right?
Yeah.
Everybody, this is like probably the most recommended, the biggest must-have person on your following list on Twitter. Like I'm going to manual check everybody if you guys are following Will Clemente. Next time you come in here, don't follow Will. You're going to be off the show, right? Let's have a deal, okay? Shall we? Everybody, like, what can I say? There has been so much time already, so much generosity on the time-wise and the knowledge-wise from Will. I'm very happy to have shared some tips as well for you on how we can recognize and anticipate some certain technical tools, using technical tools to anticipate some certain upside targets. My guess is for everybody to take away $90,000 to $120,000. But unless, like that happens, if some things, not going to crash, because if the planetoid crashes into Earth and dinosaurs, just wake up and we all fucking die tomorrow, then there's not going to be new all-time high for sure, right? So, I just want to leave you with a final. Exactly, right? Just want to give you a final reminder that if you're new to this channel, make sure to help us kick the algo's asses on YouTube. Make sure to help us boost it with some thumbs up, comments. Leave some comments. I'll be going through the questions in the comments after the show in some time. And if you enjoyed this, make sure you press and hit that subscribe button as well. Make sure to follow Win Clemente on Twitter, just like I said. And well, that's all from us. That's all from me. That's all from Will. And it's been my pleasure, and hopefully Will's pleasure, to be your today's host for the webinar. Will, thank you for coming over. This has been a true blessing.
Yeah, absolutely, Birb. I appreciate you having me on. This was really fun, and it's good to finally chat over somewhat of in person, technically, kind of, versus just texting back on Twitter all day. So it was nice to meet you, man. And I watched the show a fair amount, so it was really cool to be on. And hopefully I can come back again soon sometime.
Yeah, let's make sure to do this. Everybody, that's all, folks, we've got for you today. Stay safe. Just putting a final stop in here, right here. Cheers. Stay blessed.